heard the news? Looks like the rates are on hold, according to ABC News.
Inflation has come in hotter than expected, while the jobs market appears to be cooling.
With the inflation going up and higher than they expected, it's looking like that rate cuts are going to be disappearing the rest of this year. Potentially, we might get one next year or towards the end of next year, but it looks like they're going to keep the cash rate at 3.6% on hold, which was completely different 2 weeks ago. So that means that you may not get mortgage relief on your residential properties. If you have investment properties, it may mean that you are still negative. So how do you combat this in this era of high interest rates, where your interest rates are probably going to be sitting somewhere around 5.5% to 6%? How do you still go ahead, invest, and not be negative and grow your portfolio? So commercial property is the answer. In fact, it's the only answer out there, because the thing is, it allows you to draw the equity from your residential property and borrow 70% on a lease stock loan, which doesn't require you for servicing. It means that you do not have to be able to service. So you could be tapped out serviceability wise with lots of business debt, or you could have lots of residential properties and just cannot service but have equity in offset. You pull that money out, or you can refinance the equity if you are able to finance it and pull that out and use it as a deposit. I'll give you a quick example. Here is my client who recently just committed to $1 million commercial property, and this property is in Sydney. It's 5.8% net return. So that means it's after outgoings. Now, this is the key for commercial property: after outgoings. So the tenant pays for land tax, management fees, insurance, strata, and also the maintenance on the air conditioning, water heaters. Those are taken care of by the tenants. And that's a key difference, because you put more money into your pocket. So even if the interest rate stays at 5.5% to 6%, you can still profit from it. And you might be thinking, well, it's 5.8% net. Yes, that means if you're having money from the offset and you take that out, and that offset money 5.5%, so you have to service that, you go and get a commercial loan at 5.7%, your blended rate is somewhere around 5.6%. That means that when you get a 5.8% yielding property, you're making a little bit of margin. That's $1,000 or $2,000 positive cash flow a year. But get this, it's $1,000 to $2,000 on top of paying 100% of your debts, right? That means you can still grow your portfolio, because guess what? If you buy a property in metro, so in Sydney or in Melbourne, in Brisbane, in metro areas, it's bound to grow, right? In Sydney, we're expecting 7 to 9% growth in Sydney commercial properties, because it's so tightly held that there's very few stock and lots of demand. In areas like even stagnant in Melbourne, we're expecting 5%. In regional, we're even expecting 5% growth. And that's been demonstrated in RP data, in all the resources that there is out there on commercial property, that it grows in the same rate as residential property. It's just at different times. So if right now you're really worried about the high interest rate and how you can move forward with your investment journey, commercial property is the only way forward, because it gives you instant cash flow. And if you decide that you don't want to buy in Sydney, you prefer to have more cash flow, you can still take the money out of your redraw facilities or your equity in the offset and go and buy something in regional. If you go into regional areas, you're going to find that the yields are going to be 6.5% to 7%. So on a same $1 million property my client just recently bought, you could be making $5,000 to $7,000 in passive income, on top of being paid 100% of all the outgoings and all of your mortgage. And that's fantastic. That means that you can still grow your portfolio no matter what the market is. So forget about how the interest rate is so high at the moment. Forget about the fact that you're not going to have a rate cut. The fact that you will be able to get $5,000 to $7,000 in passive income means that if you have mortgage stress right now in your residential property portfolio and you need to support it because you don't want to sell and make a loss, the best way to actually support your residential portfolio is to buy a commercial property. The best way to keep growing is to buy a commercial property. So the way to combat the inflation and the market is, instead of going on the market and being worried and being scared, chart your own path. Create a strategy around commercial property investing. Work out how to invest in commercial property. Get educated. Have a team of mentors around you and go with someone who have done it again and again. My name is Helen Tarrant. I help everyday Australians become wealthy through investing in commercial property, and I can help you get to financial freedom faster through investing in commercial property. Click the link below, subscribe. I've got a free webinar coming up, so I will see you at one of our events or webinars.